Thank you for joining me. I'm Juan, lead trader and founder of Prosperity Trade. In this video, I'm going to talk about day trading and having a plan. You're going to want to watch this video. I would say the first thing before all this is you have to be realistic. Nobody is going to get rich overnight in day trading. Don't follow no guru's dreams. Day trading is very difficult. The probabilities of you being successful are extremely low. Statistically, most day traders don't make it. Some of the candles that seem bullish, sometimes they have a less than 40-something% chance of actually being bullish. So there's just a lot of things, and there's always odds against you. So for me, I'm very picky, and I like to make sure that I take a day trade that's worked for me in the past. I'll talk about just some foundations to give you. Every day trader, I mean, if they have the perfect secret sauce and the perfect set of rules that are going to make them successful, then Edward Thorpe in his book said that he shouldn't be sharing it, because if he does start sharing it, then it's not going to work anymore. I kind of just like give a foundation, give you some ideas that I have. You build upon that and you find your formula that works for you. First thing, you should paper trade and measure your performance, meaning take all your trades and make an Excel sheet and see if there's a pattern, see what works for you, see what gives you the highest probability of success. Find your strategy and just stick to that. If your strategy only pops up once every couple days, once a week, it doesn't pop up that often, be patient and stay with whatever has the most success for you. Identify the trading time where you have the most success. Again, find the best pattern that works for you. Find the best time where this works. You have to be very specific, so certain trades work when there's higher volume. So find those times, analyze your data, and identify what works for you and just stick to that, and don't follow no one else after that. Establish your risk tolerance. Are you okay losing $100 a trade? Are you okay losing $1,000? What's your risk tolerance? I mean, if you're only okay losing 100 and you're risking 1,000, you're probably not going to stick to whatever your strategy is, because you're going to be too nervous. How do you find your stocks? Do you scan for them? What's your watch list? So how do you find your strategy? So make sure you have something that works for you, whatever scanners, and don't keep trying a bunch of other things once you find what works for you. You always want to have your exit strategy, and whatever you want to identify as your exit strategy. Most people use some sort of support, the low of the candle. If it's a bull flag, they use the low of the bull flag. Whatever it is that for you, find where you want to exit if your trade doesn't seem to be working or following the pattern that you usually see forming. And then have a profit target. Don't just try to hold, because a lot of times, especially if you're trading these small cap stocks, they can climb a bunch and you think you're up a lot, and then flush down, just drop so quickly, and then halt and then drop again. So you can be up a few hundred, a few thousand, and then be down a few hundred, few thousand. So have some profit targets. I always like to have early profit targets where I'll take some portion, so that way even if it drops, I can get out and still be green. But that's just my strategy. Another thing you like to do, if you're a day trader that's going to be trading small cap stocks that move quickly, you're going to want to establish some hotkeys. I'll trade both. Every once in a while, I'll trade one of the small cap stocks, but I also like to trade large cap stocks, and large cap stocks don't move as quickly, but I still use hotkeys. So for me, this is just an example of how to set hotkeys. But for me, for example, if I want to take a small portion and sell a small portion, if I hit Control C, I'm taking out 25% of my position. If I hit Control X, I'm taking 50% of my position. If I hit Control Z, I'm taking 100% of my position. Those are some of my hotkeys that I have. I have hotkeys also to buy quickly, but I really don't use them, because if you have a plan and you're just waiting for a formation, you set your limit of whatever you want to buy, and you really no need to quickly buy something. And sometimes, you set these quick buy hotkeys, and it could tempt you to buy when you usually don't want to buy. So I want to show you here a video of a day trade I recorded for myself, where I had a plan and I executed my plan, and the plan worked out perfectly. And this is one of kind of like my favorite patterns, where pre-market, you see here, this is dark and this is lighter. So pre-market, it spiked up all the way up to 440. Then it didn't give back all its gains, kind of only gave back some of it, but then it just consolidated in this channel here. I would take like a line here in a line up here and say, I wanted to break out of this channel, and that would be my entrance, being the pre-market breakout. So here, I have it on mute, but I'm talking about, this is the high, this is the low, this is the scanner that I used. This is how I found the stock. I used scans. I don't have an affiliate link with them. I just like them. They are a little bit expensive. It's about $150 a month, so it may not be for everybody. But in this video, I'm just discussing how I found this stock. It popped up in my scanner. See here, pre-market breakout scanner. So I have a custom scanner that I set to find these setups. Again, this is talking about the day trading plan. In the video, I'm just discussing my trade that I'm going to take, what I'm waiting for, what I'm looking for. Right now, it's in this channel. You see here, these stocks, they haven't dropped all the way back down and they haven't spiked up, but they're kind of like forming a channel. This line here is the bottom of this channel now. And now I'm establishing what the high of this channel is, which is $3.99. So what I would like to see is it keep its strength, kind of bounce off of this, and then that would give me confidence to get in. So I got in, and then look, it broke. This is the pre-market breakout because it broke this pre-market channel. See here, I'm circling this in the video and talking about how, it broke the this pre-market channel. This is one of my main go-to because this works for me. It's finding these stocks that establish this channel, because this channel, what it's buyers and sellers. There's more buyers than sellers, and that's why it's just kind of forming this channel. Once it shows me that it looks like the buyers are in control, then I anticipate that it's going to break out of this channel, and then it's going to bring in more volume. Like, look at the volume here. So you see this volume. The volume bars are low, and then look at this volume here. As soon as it breaks out of that pre-market breakout, it spiked up, it nearly doubled. You see this bar down here. So you see this bar here, it doubled once during the pre-market breakout. So look at this, $3.99 all the way to $5.70. I mean, this is kind of trades that, to me, or work for me. You have to find your own strategy, your own comfort level. So at this stock went as high as $7.99, then it came back down. So again, pre-market breakout, look at all the volume that came in with that. This is a trade that I would take 10 out of 10 times. I would see this pre-market. Let me go back here. I would watch this pre-market. So it came out on my scanner. You see these lines here, like it didn't retrace all the way down here. So what this is the Fibonacci retracement, and it just tells you how much of the percentage the stock give back. Like, so it spiked up, and then how much did it retrace? More than 50%? For me, if it doesn't retrace more than 50, 60% and it starts forming these channels, I'm going to have it on my watch list. Then I'm going to see when the market opens, is it going to kind of still hold within this channel? It dipped below it, but then it went right above it. I think at this point here, I would feel more comfortable because I'm looking at the volume increasing, and then I jump in here, and my risk is if it doesn't work out and turns around, it's only like a 50-cent loss. Like you see here, I'm watching, I'm like, okay, this is a good sign. It spikes up, double volume, and then it just keeps going. And this 452 was the high of the pre-market. I definitely would look into taking some profit here and then trying to hold for the rest. And it went as high as 750. Just one plan, one example. So many other strategies. Some people only short stocks. The key is to have a plan and stick to the plan, right? So, if you have a plan, then you're going to overcome FOMO, which is day traders' worst enemy. So always stick to your plan. And that way, when the guru's posting, oh, I made $40,000 today, you don't feel bad. You just go at your pace, do what works for you, and don't worry about anyone else, and adapt your trading style with what the market gives you. That's another thing that's important. Like, sometimes pre-market, is hot. Sometimes post-market is hot. Sometimes certain stocks, certain sectors are trading and are more bullish. So COVID vaccine sector. So you can still stick to whatever your strategy is, whatever your plan is, but just know where the volume is. Know what people are trading. Don't try to trade this pattern and nobody's trading the stock, and the stock has no volume. Pick the stocks wherever the market is. See what the market is giving you. So that was just some quick advice on how to form a day trading plan. Thank you for watching. Please subscribe, comment, and like, and see you on the next video.